Okay, welcome to the final presentation lecture for Chapter 15, Section 3, Analyzing and Recording Cash Payments. Please make sure that you have the notes so that you can follow along and complete the note guide as we complete the material for Chapter 15, as well as having the demo problems handy in case you wish to attempt any of the demo problems as we go through the Section 3 material. So let's get started. Cash receipts. Different kinds of cash receipts. There are procedures to manage cash payments. Authorizing of all cash payments means that cash now is being paid based off of a source document indicating payment is needed. All cash payments are written out by checks. All checks are used as pre-numbered checks. And then you keep an account for all of the voided checks. So when it comes to managing our cash payments, and even different kinds of cash receipts, all of this is going to revolve around the cash and bank account. So it should obviously raise a flag in your head that if we are doing any type of a cash payment, I automatically should know one of the accounts affected has got to be cash and bank. So if we are going to purchase anything, if we're buying anything using cash, it is a cash payment. Let's say, for example, we're going to record the cash purchase of insurance. We are notified that we owe the insurance company because we have to pay our premium, which is the cost of insurance protection. This is paid in advance at the beginning of the coverage period. It is considered an asset because it is a benefit to the company, and it is recorded in the prepaid insurance account. So all of this is review. We already know how to record transactions in which case we are buying prepaid insurance. If we are processing payment for one of these, in this case, this premium, we have our check on your mark Athletic, where is the name of our organization. We are paying to the order of Keystone Insurance Company for $1,500. This is the premium that we owe. So the processing of this check is sent to the insurance company. It is then cashed, and then our checking account obviously is updated based off of that check that was written. We also have to journalize this transaction so that our accounting records are accurate. So on December 17th, On Your Mark paid $1,500 to Keystone Insurance Company for the premium on a 6-month insurance policy. Check 101 or 1001 is our source document. Just to review, if we are buying something, there are two assets, in this case prepaid insurance, cash and bank, two accounts that are affected, both assets. We're going to debit one asset to increase the value, that's prepaid insurance, and credit the other asset, that's cash and bank, to decrease it, $1,500. And when we journalize this, it's going to look like this. December 17th, debit to prepaid insurance, $1,500, credit to cash and bank, $1,500, check 1001 as a source document. This is nothing new. This is review. We've already been doing this if you go all the way back to Chapter 6. But now if we switch gears a little bit now and we are purchasing merchandise. So now we are purchasing items that are needed in order for us to make our product to sell to the customer. On December 19th, On Your Mark purchased merchandise from Fastlane Athletics for $1,300, check 102. Here is an example of the source document, which we are going to use to determine how this account is going to be affected in a transaction base within our general journal. But before we do that, let's take a look at what it's going to look like in a T account. So in this case, whenever we purchase merchandise, that's when we're going to use that account called purchases. This is the purchasing of all merchandise. So in this case, we would debit purchases for $1,300 and credit cash and bank for $1,300 because we used cash to make the purchase. Putting this in the general journal is relatively simple. December 19th, we debit purchases for $1,300 and we credit cash and bank for $1,300. Check 1002, our source document. When you see anything in the transaction clue, purchased merchandise, immediately think purchases account. Recording cash payment now for items purchased on account. So the purchase has already been made, the merchandise has already been bought, we've already received it, now we are just making good on the invoice. On December 24th, On Your Mark paid $22.54 to ProRunner for merchandise purchased on account $2,300 less a discount of $46. Check 103 is our source document. So we are only going to write out the check for $2,254. However, this is applying to a purchase that we had recorded earlier on account as $2,300. So now how are we going to transact this so that we are still in balance? Let's take a look at it in T account form. We will end up debiting accounts payable for the total amount of the invoice, which is $2,300. We are going to credit cash for $2,254 because we are being discounted on what we owe, and that $46 discount recorded in purchases discounts. Debit accounts payable $2,300, credit cash and bank $2,254, credit purchases discounts $46. Also, there's going to be a $2,300 debit that's going to be posted to the subsidiary ledger to that particular supplier or vendor, ProRunner Warehouse. Here's what it's going to look like in the journal. Debit accounts payable, ProRunner Warehouse, with the slash in the post reference column, $2,300, indicating this $2,300 is posted to both the accounts payable controlling account and ProRunner Warehouse subsidiary account. We are then going to credit cash and bank for $2,254 and credit the discount $46. And then there's our source document, check 1003. Now take a look at demo problem 15.3. This is a problem that we will be doing in class. This is a guided practice problem. We'll be doing this together. If you want to go ahead and attempt it, give it a try. See if you can put the proper accounts on the T's and put the dollar amounts on the right side. Here's another transaction that goes along with demo problem 15.3. Give this one a try also. 4 and 5. We'll be doing, like again, we'll be doing these in class. And then finally, number 6. I believe this is the last one. It is. Okay. Other cash payments, shipping costs, FOB destination, and FOB shipping point. Supplier pays the shipping cost or buyer pays shipping. So FOB is relating back to the shipping cost. Now the question becomes, who's going to pay this? Now, depending upon the agreement with your supplier, that can be negotiated and determined at the point of sale. So whether or not the supplier is paying for it or the buyer pays for it is going to have to be transacted if it's us that are responsible for paying for the transportation. We are going to use an account called transportation in to record this. Transportation in is going to be a debit side account with an increased side of debit and a normal balance side of debit, meaning to decrease the account, we credit it. Let's put this let's put this account in action with a transaction clue. So on December 24th, on your mark, issued a check 1004 for $275 to Daryl's Delivery Service for shipping charges on merchandise purchased from SportsLink Footwear. All right. So here is the check. We have to determine what is going on with the check, who we have to pay, and how we transact it. So we do this by debiting transportation in for $275 and crediting cash and bank because it was a check that was written for payment $275. Check number 1004 is your source document. Bank card fees. If we are a merchandising corporation, we get charged by bank card companies to process their cards. And it does increase our sales, but it comes at a cost to us. So when we are charged these bank card fees, we have to pay them in order to satisfy our bank card companies, such as maybe American Express, Visa, or even MasterCard. For this, we are going to use an account called bank card fees expense. So on December 31st, on your mark records, the bank card fee of $75 showed up on our December bank statement. We have to record this as a debit to bank card fees expense for $75 and a credit to cash and bank for $75. Now for this transaction, there was no check written. We were notified of this happening on our bank statement. Therefore, December bank statement becomes the source document. Demo problem 15.4 we'll be going through in class. This is the general journal that's associated with that. So go ahead and give that a try if you wish. Otherwise, we'll be working on it together. And that concludes the presentation lecture for section 3. Please make sure you go back and revisit the slides if needed. Get all the notes copied down into your note guide. Attempt those demo problems. And we will see you next time that we meet in class for some guided practice and independent practice.